Hello, in this lecture we're going to talk about S Corporation and how to close one. At the end of this we will be able to explain some requirements for closing an S Corporation, including some of the bookkeeping involved, some of the IRS documentation, and some state documentation. As always, want to make sure that we seek advice from a professional if you're looking to close up the S Corporation. This is not meant to be a comprehensive list. Every S Corporation close will be different and individual in and of itself. This is just to give some ideas of the areas that need to be taken a look at and some of the different areas to research into as you go through kind of that closing process to make sure that that you have been touched on everything that needs to be looked at. So what steps need to happen to close out the S Corporation? So we're going to talk about some of the bookkeeping, how we're going to close out the books, how we're going to actually do the debits and credits, or what's the process that needs to happen when we think about the bookkeeping, IRS documentation, what's going to be due to the IRS in order to make sure that we get everything in and completed and closed up. And then we have the state documentation. So you'll recall that we basically incorporated in a particular state at the Secretary of State generally. So then we're going to have some documentation with the Secretary of State. Your state could have a franchise tax board, basically a separate entity dealing with the tax requirements from the state, or the reporting requirements at the least from the flow-through entity of the S Corporation. And then you probably have payroll taxes that you're going to have to deal with at the state side as well. In California, at the Employment Development Department, you want to make sure that you close up all the payroll information as well. What bookkeeping needs to happen? So we're not going to go through basically the process, the debits and credits of closing out the books. I just want to give some general instruction or some general idea you want to think about as you're thinking about closing up any type of organization, and that is the process is generally to sell the assets first and then pay off the liabilities and then distribute to the owners. You want to keep that in mind as you go through. If you do that in reverse order, if you start distributing to the owners before you sell the assets and pay off the liabilities, you could end up in a situation where you did not get as much for the assets as we had originally thought, and that could cause problems in the closing process. So we won't get into the debits and credits here or the technicalities on closing out and who should get what. That's going to be something you'll negotiate in and of yourselves, but just realize that the general idea of the closing process is to hopefully to sell the assets first, get all the cash, then pay off all the debt. Then you got the cash and you can distribute. That'll be the cleanest way usually when you go through that process. What needs to be provided to the IRS? So we just want to take a look at some of the documentation for the IRS. Now, of course, we file with the IRS if we're an S Corporation 1120S. So we're going to need a final 1120S. We'll take a quick look at that 1120S in a second. And we're going to need the final K1 form. So the K1 forms are what is used in order to report the income flowing through the 1120S to the individual shareholders. So the K1 is kind of like the W-2 that the shareholders get, and they then report the income that flowed through the corporation using the 1120S to their individual 1040s. So we need to make sure that we get that final one done in the final year of operation. Final quarterly and annually employment tax forms. So even if you're a single member like S Corporation with only one owner, you probably have payroll taxes because you're supposed to pay yourself a reasonable salary. So most S Corporations are going to have some kind of payroll taxes, even if it's just to themselves. You want to make sure that you close everything out, whether it be quarterly, whether it be whether you're doing quarterly forms, monthly forms. The 941's a typical form for filing, as well as the 940, which would be the year-end documentation. You want to make sure you get those two out, and you want to make sure you do the final W-2 and the W-3, get all the payroll reported out there. You don't want to mess up on the payroll. That could cause a lot of problems. Final retirement plan reporting, that's a form 5500. That's something if you have a retirement plan in which you have to file yearly reports, something like a 401k plan. If you do not have that, then of course this is not a requirement. But if you have a retirement plan, another thing that you just want to make sure that you close out properly, or else it could cause problems down the road. Report corporation dissolution or liquidation. So we'll take a look at Form 966 for the IRS. And you can see a comprehensive list of this if you go to the IRS website here, irs.gov, or more specifically, here's the URL that will take you to the checklist. Remember, that's the checklist for the IRS. And then you kind of got to deal with whatever state you're in. You want to go to the state and make sure you're taking a look at both entities and doing everything you need to do to close everything up properly, so you don't have to worry about it later on. Here's, of course, the 1120S. Nothing different about this. We're just looking at page 1 of the 1120S. This is where we report the corporate income. This is the flow-through tax return. It gets reported on the 1120S, then flows through with the K1. The change here being we can indicate, of course, that it's a final return on the final return of the 1120S. Then we have the K1. So remember, the K1 reports the income from the corporation on Form K1, and then K1s are distributed to the shareholders. And again, we could report on the K1 that it's the final K1 because it's the last one that you will be receiving. And so we want to indicate that. Here's a corporate dissolution or liquidation, Form 966 here. And you can take a look at the IRS website and look this up and see the instructions for this form. Again, irs.gov is the website for the IRS website, and you just search for the Form 966 and look at the instructions related here. What needs to be provided to the state then? So remember, we incorporated in the state, and the Secretary of State generally is where we incorporated, and then we went to the IRS and make sure that we were an S corporation by filing to be treated as a S corporation. So when we close out, we got to deal with the IRS side and we got to deal with the state side. So the states may differ from state to state, obviously. So different states could have slightly different requirements. What the main thing you want to do is just make sure that you're touching on both of these sides. You want to make sure that you're closing out the IRS and doing the final documentation, final return there. Don't forget to to make sure that you're closing out with the states you're at too, and make sure all the documentation is done there as well. That could include the final state tax return. So depending on the state you're in, you could have the final state tax return. Franchise Tax Board is where we have that in California. Remember, we generally incorporate with the Secretary of State. So the Secretary and the State and the Franchise Tax Board often work together in that Franchise Tax Board does some of the processing of the paperwork and whatnot for the Secretary of State. So you want to make sure that you get that final tax return in, and you want to make sure that you pay any type of fees allocated to the S corporation. So although the S corporation is a flow-through entity, some states will charge some type of fee in order to allow for the S corporation to be processed there. And for example, California has an $800 fee, and if you do not do the paperwork to close everything up, meaning you don't have all the prior fees paid up and you do not have the final tax return reported, then it's very likely that it will not be closed properly, and the Franchise Tax Board will therefore feel like you owe them $800 a year at a minimum, or whatever the minimum fee will be, until it is closed properly, and that could be a headache. So you want to make sure to get the paperwork in the final year so that you don't get problems down the road. Certificate of dissolution with the Secretary of State. So remember, when you're dealing with a state, you may have at least two people to talk to. The Secretary of State is who you form the corporation with, and then you could have the Franchise Tax Board dealing with who you report the taxes to. And then you also have the final state payroll tax form. So remember that even if you're a single member S corporation, you're probably filing payroll taxes at least for yourself because of that requirement to pay a reasonable wage. You want to close that out with the IRS, Social Security, Medicare, federal income tax, and you want to close it out with any kind of state requirement as well. In California, we got the Employment Development Department. You want to make sure that you get all the payroll done, once again, on both sides, on the state side and the IRS side. So here's an example of a certificate of election to wind up and dissolve. This is from the Secretary of State website. So whatever state you're in, you can look at the Secretary of State website, just as we did with the IRS, and kind of see what their instructions are to close everything out. You want to do that, of course, with the Franchise Tax Board or whatever taxing agency on the state side too, as well as whatever taxing agency for the employee side of taxes as well. So you want to take a look at that. You can go to their website. You can try to look up the certificate of election to dissolve and see what the Secretary of State has on that side. So that's going to be the major advice to take a look at. You want to make sure you do the bookkeeping in order, sell the assets first, pay off the liabilities, then distribute, then go to the related entities in which you're going to have to close everything out. Includes the IRS, includes the state, Secretary of State included, and you got the payroll on both the IRS and the state at a minimum that you're going to want to make sure that you get closed up and wrapped up.